What is going on, guys? Kings and queens, how is it going today? Welcome. What is going on? 3 o'clock in the afternoon, Eastern time zone, East Coast time. All right, we'll give it about 1 quick minute here. Let everybody roll in. Appreciate y'all being here today. Appreciate you all. If you guys can help me out, put a 1 in the chat if you guys can hear me loud and clear. Today it's gonna be pretty interactive here today. So we're gonna have everybody on and give you guys some game. Good to hear. All right. All right, let's get right into it. So again, welcome everyone that's here today. I appreciate everyone being here today. We got a lot of exciting things that we want to share with you guys on what's happening here in our space. And it really comes down to a lot of the different things that are happening in the creative alternative funding, and also how to be able to secure and bulletproof your business in any type of market and what's happening right now. So again, today we appreciate everyone that's here today so that we can make sure that we give you all the secret sauce so that you can take, execute, and run your business like it should be, okay? So let's get started right now. We have a couple of our members on our team here today, but more importantly, myself, Hiram, and my business partner, Craig. Say what's up, Craig. We are going to be breaking down the business growth, and we're going to dissect this here as best as we can. So without further ado, I'm going to present my screen here. That way we can get everybody going. Bear with me 1 second. All right, here we go. Okay, put a 1 in the chat if you can see my screen. I'm gonna go into slide mode here really quick. All right, perfect. All right, so one of the things that we want to definitely talk to you guys about is business growth, right? How do you keep your business and preparing your business for success? I think one of the biggest things is that we all, as business owners, or some of us that are trying to get into the business space, or get out of the 9-to-5 grind or whatever the case is how do I secure my business so that I have the best fulfillment as possible to make sure that I fulfill whatever it is, right? So it's very important that as business growth, you understand that you understand the whole process. Can you please? That you understand the whole process on how it is to be able to grow your business exponentially. So let's go dig right into the details. Today's topic is funding and banking trends, right? It's always changing continuously. You have turning liabilities into assets with business credit. We're going to break down some of the things that you need to have in order for your business to be successful when it comes down to business credit. How to secure the bag using artificial intelligence. Very important that when you apply to a lender, you need to know what lenders know about you more than what they should know. They should know about you, right? It's like you should definitely know what these lenders are looking at from day one. Fourth thing is we want to talk about cash preservation. A lot of you have been hearing about, FedNow, or getting rid of Zelle, getting rid of all this because the federal government wants to move that money into more of a digital currency and control more of your assets so that they can always cut your information off or your account off. How to be able to secure and do cash preservation so you don't find yourself in a deep situation. And then, of course, how to be able to get higher credit limits by using the PYM method. You might say, well, what is PYM method? I think it's very important for you guys to understand the whole process and how that works, okay? So funding and banking trends are changing drastically, daily. A lot of what's happening right now in today's space when it comes down to lending it has too much information on you as a business owner, more than what you have information on these lenders. And that's kind of scary to a certain point due to the simple fact that nowadays, even when utilizing artificial intelligence, a bank only needs your first, last name, telephone number, email. They're pulling information and data from companies that gather data like Dun & Bradstreet, MX, Small Business Financial Exchange. They're pulling information from LexisNexis, and all these data gathering companies are being able to provide from the most simplest credit score, right? Most of us here have Credit Karma, and we give Credit Karma that type of power by allowing them to utilize our social, our date of birth, and our personal information to sell it to credit card companies. What's the first thing that happens when you log into Credit Karma? It gives you a score, and then once it gives you a score, what's the second option? Here's an offer. Here's an offer. Here's an offer. That's why they can maintain $1 million a year platform and do it for free, because they're continuously being bombarded and selling your information out to other companies, right? This is what we call risk-based pricing. A lot of times when it comes down to lending, a lot of lenders, once you go through the application process, they will provide you what we do with your information, terms and conditions, and risk-based pricing. What do you score in the metrics of from 350 credit score all the way to 800 credit score? The data has been given to these data gathering companies for years, and that's why today artificial intelligence is at the highest level, which can be very scary for some of us. The fact that we're moving into a digital currency where you don't even have to walk out with your wallet or your credit cards. You just walk around with a phone, Apple Pay or Google Pay, just go around and even apply for a credit card through your phone. That is the trends that a lot of people are now starting to really try to hold their information. And that's why it's important at times for us to have our understanding of what our credit report should look like. Constantly monitoring our credit report to make sure that there's no intricacies or there's no disparities or anything that is separating you from your own information, right? The dark web is out there. So we need to make sure that we secure our house, which is your credit report, to make sure that you are utilizing your credit correctly. Now, one thing I'm always going to say is, as people that or folks that are in the lending space, we love business credit for that reason. There's a reason why we love business credit, because business credit allows you to transfer your liabilities into an asset. A liability is the fact that I have a cell phone through AT&T, Verizon, T-Mobile, whoever. I have a car through whatever finance companies out there. I have real estate property, all tied into me. Now, you might be getting a return on investment, but I haven't heard of anybody that says, hey, let's be real honest, I get a return on investment on my phone. Well, that's great, but honestly, if you're able to take that, you transfer that from a liability that is costing you money, and you change that and convert that now into an asset, either appreciating or depreciating. Talk to your CPA, because they know how to find a way to be able to save you some money on the end of the year with liabilities. But when you transfer that liability into an asset and you divorce yourself financially from your business and move that over to the business, now you start finding yourself and being able to now not utilize your personal credit so much. That is why a lot of times when I'm dealing with certain clients, I'm saying, hey, let's use your credit right now that you're in good shape, and now let's go get yourself some high yield, high reporting, high limit credit cards that can now secure and help you in building a better future for yourself. Now, how many of you, just put one in the chat if you know that when it comes down to business credit, there is no such thing as high utilization? Y'all know that? Put a one in the chat if you know about that. If you take a $100,000 American Express card right now, and you got the one that has the monthly payment, or a Chase card, and you now move into a direction where you put all that liability from you personally into that business, and you use that card the whole month, all utilizations used, it does not co-report with your business as long as you was able to do it the correct way, right? That's the importance of business credit. Same thing has to do with when it comes down to automobiles. When you're transferring that liability from you, like, stop co-signing for these cars. If you notice, your Social Security and your EIN has the same numbers. The government sees you personally and also sees the EIN as entities. It doesn't matter if it's an LLC, C Corp, or S Corporation. They're entities. So your business can build corporate credit the same way that your personal Social Security can. The difference is that on the personal side, you have Fair Credit Reporting Act. And anytime that you pull and receive credit, you are able to now, these banks need to report by law. When it comes down to business credit, you don't have to, okay? They don't have to, but the greatest thing is utilizing these business credit lines to be able to help you and catapult your business to the next level. Okay, so I'm gonna let Craig talk on this because he's really good when he says this. And let me tell you something. There's a story behind it. He was on a golf course chatting with a bank, and this is what banks really talk like behind closed doors. Go ahead, Craig.
Hey guys, can everybody hear me? Put a 1 in the chat if you can hear me. All right, awesome. Thanks for registering, guys. Appreciate your time. Yeah, I will tell you, banks lend to companies that have money that don't need, and not to banks that need money. And what does that mean to you? Okay, I know Hiram was speaking about AI. I will talk about a company called Plaid just real quick. Okay, this company knows more about me and my company than I do. In fact, when I was applying for some either personal loans and or business loan and early on, Plaid pretty much knew things that I even forgot about. You know, even old addresses. You'd be surprised how much information is AI generated. But I will tell you about AI. All right, so listen up. AI is only as good as what is written into it. Okay. So AI for lenders, banks, anybody that lends money, any institution that lends money that uses AI, it's about as most conservative approvals as you can get. Hiram and I, uh, we did like a beta test. We took about 30 files in the last 90 days. We pushed through our AI and we looked at the types of approvals that we were getting, and then what types of approvals we were getting when we got involved on our client or your behalf. Okay. On average, AIs will give you about 70% of your full potential. So if normally the normal way you get approved for you or your company 100,000, that AI will generate about 70 or $75,000 approval. Okay, where you link in at is when you have somebody like Ladder Financial Group, where we go in and fight on your behalf to find out why it was lower than anticipated or what should have been based on previous trends. And 9 times out of 10, guys, I'm telling you, we got it to the full potential of 100 grand. Okay. Another thing AI will not do for you, they will never give you the why. When you apply through AI, you're either approved or you're not approved. You're not going to get the full exposure or the understanding on why. Or if you were declined, tell me why I was declined, Mr. AI, right? Or Mrs. AI, right? Or if I thought I could probably easily get 100 grand and you're only telling me I'm maxing out at 50, well, tell me why. What is it that you're seeing? You're not going to get that in return. At Ladder Financial Group, we take the time to not only take advantage of the AI systems, but use it as a catapult into getting bigger and better and more approvals. Okay. We become a generation of, we get kind of lazy, right? We want money now. I want to be able to get a loan right on my phone, and it happens rather quickly. But you could be doing yourself a disservice if you don't go the extra amount to find out how much you can fully get by having a conversation with the decision maker, or the person that they put in charge of making the final decisions. Because sometimes it's good to stay automated, and sometimes it's not, right? So when you have different strategies like we can use, sometimes bringing a human in the middle of it can throw a wrench into it. Sometimes when you jump in the middle of it, you can get better and bigger approvals. And knowing the difference how is what we call the ladder difference, right? That's where we can come in and help either yourself or your clients, because things are changing rapidly, guys. They're changing rapidly. I was taking notes as Hiram was talking. There's some trends in there, right? End-to-end automation is very powerful and sometimes it's pretty scary. But like I said, you're about a 70% full risk on that, right? Because if they're looking, when they use AI and they don't want humans involved, they're looking for a quantity, not quality, right? They throw an algorithm in there and you're just a number, right? If you hit key points, oh, that's an automatic this. All right, well, let me finish explaining to you the rest, Mr. or Mrs. Lender, right? So that's the kind of approach that we use, and I want you guys to keep that in mind. The Feds right now, I don't know if you guys keep up with it. I don't know if you keep up with the trends. The Fed rate right now is at 5.5. Prime is at 8.5. Those are ridiculous numbers, guys. Okay. What does that mean to you? That means the lenders are starting at 5.5%. That's their zero, right? So anything that they do sub that, they're going to have to compensate for it by either charging excess success fees, annual fees. If you got a big loan, they'll do an early payoff penalty. You know, there's all kinds of ways that they try to sneak in these fees to make up for the hard market that we're seeing right now. Okay. So when you're looking at different types of loans, whether they're corporate credit cards, personal loans, or business loans, you got to know the bar has been set a little bit higher. So now you got to pay more in interest in the short term. Okay. Long term is your best bet. You, just like the banks, you want to have a plan with that working capital that you need. Having that plan is so important, down to the penny. Do the budget. If I borrow this much money at this rate, am I going to meet my margins? If you're not going to meet your margins, then it's a bad decision to take the loan. If you can exceed your margins, then that's a good business decision to take the loan, right? Because now it's just eating into a little bit of your profit, but it's still profitable, right? So keep that in mind. All right. I can babble all day about a lot of different kinds of stuff right now, guys, because we're definitely going to get into a Q&A. But I want to talk about corporate credit cards just real quick, right? Corporate credit cards, I always recommend those. You guys that know me probably have heard me talk about this. For a small to medium-sized business, revolving trade lines and credit lines work so much better than a traditional bank line of credit. A bank line of credit that could seize up your bank. Number one, it's generally 9 times out of 10 at the same bank where you keep all your money. So whether you want to pay them or not, they're going to take it because they have access right to your account. That's number one. Number two, when you do a bank line of credit and you take a draw, then that draw now becomes a term loan because you're held accountable for that monthly payment forever, whatever the predetermined term was at that rate, no matter how well or how struggling your bank or your business may be doing at the time. With revolving lines, we can get the numbers so high now that it's very comparable to a business line of credit. Most business line of credit startups, what I mean by startup in this, I mean that this is your first business line of credit as a business owner. Okay, that could lead to a much, much higher risk, obviously. And the amount that you're going to get approved for is going to be a lot lower. They're going to start you out and see how you play with it, right? Where on the corporate credit card side, you can go upwards of 150 to 200,000, right? At 0%. And if a certain month you happen to be struggling, like whether you're seasonal or somebody quit on you or you're getting slow paid by somebody that you can't get the money in, then the minimum payment is only 1% of the balance, right? It's not that big number that you would have if you would have taken a draw. So I want you guys to remember that as well when it comes to cards. All right. So let me throw a little gem out to you based on cards as well. When you're using cards, for those of you that have accounting systems, you want to link those business corporate cards to your accounting system, whether it's QBO or ADP or whatever the third party is that you're using, right? And then I want you to understand this concept if you can. And this is what I mean by what the other thing that I say all the time, right? You want to use credit cards for money that you do have, not money that you don't have, right? So let's say that you connect those business cards in there at 0%, or maybe they're even not 0%, right? But they come with perks, they come with cash back, they come with points. If you guys travel, you can sign up for whatever types of rewards you want. But the only way to benefit and get and maximize those, can you admit that, please? Thanks. To maximize those rewards is to use the card, right? So the consumer mindset says, well, I can't use the cards because I don't want to, I don't want to get my, I don't want to hurt my credit and I don't want to have a big payment, take me forever to pay it off. And all those things come through your mind. As a business owner, you want to go, okay, what expenses do I have? Well, do I have payroll? Do I have rent? Do I have, whatever your expenses are in your business? Have that money like you normally would in your operating account, but use your corporate credit card to pay for it. Wait 3 days and then use the money you were already going to use for it and pay it on the card. That way your card is going up and down and you're maximizing all of those points all of the time instead of just letting it sit there and do nothing for you, right? Put your corporate credit card or your personal in your personal life, put it to work for you. There's a reason why they give away all these giveaways because they know the American consumer will max out that card or get it above 50% and then never use it. So they're only going to give you the rewards in the very beginning, maybe the first 90 days. And then by then they're done. They know you're not going to come back. That's the general rule of how people think, right? But as an entrepreneur and a business owner, you want to make sure that you can always do that, right? To maximize it and take advantage of that. Okay. So definitely think about that. Make sure, remember, link your business cards to your accounting system. We happen to use it for payroll. So just to give you an idea, we max out our points all the time. That's why Hiram was flying around free everywhere across the country and overseas. He's like, oh, no, we're good. Those are points. So like, all right, cool, let's go. So It's a big, huge advantage depending on how you want to use it, right? We also use it to help us with payroll tax. You know, it's a good business plan to do that. You want to maximize what's out there for you. Okay. What's the next slide on there? Let me give it back.
Okay, guys, so let's talk a little bit about what ends up happening in the space of filings and what banks know about you. Let me present my screen here really quick. So obviously we know that banks know way more about you than what you think you know about them, right? We kind of touched on that a little bit. Let me let you know this. Your bank does not have the same rights, or your banking information or your business information does not have the same rights as you personally. Your company does not have those privacy rights. So just let's forget about that. Banks are constantly in the business to provide you funds. So they use data gathering companies to find out what is your business doing. From UCC filings, which means anytime that you apply for something, they put a lien on your business, EIN. Meaning if you get a Chase $250,000 Chase line of credit or term loan, there's going to be a UCC filing on your business, EIN, stating on this date, with this account number, this business owes $250,000 to our institution. So what does that mean? Sometimes information is not done correctly. And if you have a business for 2 or 3 years, if you try to apply for a loan, you end up getting a UCC filing, but your business never applied for it. So it's important that you pull your NAV report if you're establishing business credit, right? Not if you don't have any business credit, don't bother. But if you're establishing business credit, there might be another business on the other side of the states that may have a similar name and somebody fat fingered it. And all of a sudden now you have a UCC filing on your business that you have some payments on. So it's important to understand that when it comes down to the data gathering companies, Small Business Financial Exchange, Plaid, MX, or any of that, it's important that you understand what they know about you. Now, one thing I'm gonna let you know is they can't see if you go into Publix supermarket or you go into the gas station or whatever the case is. All they know is that there is money that is flowing through the business. And when there's money flowing through the business, all they have to do is pull what they call a bank rating. A bank rating is basically telling them from this person deposits anywhere from $100 all the way up to $100,000 on a monthly basis. It also calculates the opening statement and the closing statement of that month that you're operating on. Banks operate on minimum of 90-day sequence. That means that if you're trying to apply for a business loan, please make sure that there's no NSFs within that 90-day period. If you want to get the prime loans with the prime rates, you need to be able to have no non-sufficient funds or returns on your business bank account to get the highest and best quality loans that are out there. Now, we are still seeing loans that are 9%, 7%. Yes, they still out there, even though when rates are high, but they have more shorter terms than what we used to see. If they used to give 3-5-year term loans, now they're only doing 1 to 36 months. That can be a little tight for some companies. That's why we always recommend revolving lines of credit over a traditional line of credit or term loan, right? Just like Craig said, is only 1% of what you borrow. Is much better than a consistent $2,000 a month to $4,000, depending on how much you borrow from that bank, okay? But debt servicing is important with the lender. How do you get a lender to provide you terms? That comes from the amount of money that you leave in that bank account in the beginning of the month, opening statement, and closing statement. In the middle of the month, that's okay, right? You're moving, shaking things. But banks like for you to have money in the beginning of the month and at the end of the month, because the end of the month rolls into the following month, which is now your opening account. So let's talk about bank rating. It goes anywhere from a low 1, which means that you only leave $100 to $399 in the bank account, to a high 5 bank rating. Okay, this is the kind of stuff that lenders loan money based on. A lot of us out here thinking that I need to have an 800 credit score, I need to have $100 million in my bank account. No, they're basing it based on your bank account. So if you're leaving a good solid 10,000, which is a low 5 bank rating, all the way up to a high 5 bank rating of $39,000 a monthly basis, what are the chances that you can make a $100,000 monthly payment or $200,000 monthly payment, right? On a loan size of that amount, I mean. It's important that you understand this information because this is what triggers internal banking mappability. Remember that word, internal banking mappability. When a bank takes an SBA loan, you have to score a minimum of 136 on the internal scoring system for an SBA. That's just to start the conversation. Forget the documents that you have to provide them, but a 136 is what gets you in the door. That means the data points, name, business address, or how long they've been in business, TIB, how much money they're rolling through their bank account. All that information is pulled and extracted to be able to provide you a lending decision through the SBA, even from micros. A lot of people out there throwing some ads out there, guys. Hey, listen, one of the things that I always say when it comes down to business, it's all about discernment. If you see most of these ads on Facebook, they know how to target you. If you ever hear somebody talking about, hey, you only need 3 months bank statements, you only need $10,000 on a monthly basis, listen, you know that's an MCA, and you know that's daily or weekly payments, and the payments are through the roof. We don't recommend it unless you're making $500,000 to $1 million a year and you need that quick fix, government contracting, we're going in, right? Because those are business killers. That is positioning yourself, and you're putting yourself in a very desperate mode. They're predatory when it comes to that type of practice. And again, no offense against that, more power to them. But it's all about positioning your business correctly, and positioning your business correctly comes down to creating that liability and doing what? Transfer it into an asset. Okay. Craig, you had something you wanted to mention?
Yeah, I wanted to talk a little bit about those types of loans, right? And that was a good Jim. Thanks for stealing it. No, what I say, when it comes to that type of loan, guys, it's for the needy, right? It's for revenue loans, merchant cash advance type of loans. You guys all know, if you ever hear on the radio, see on TV, or just see a reel on it, hey, 6 months time in business, fund within 24 to 48 hours, you make 120 grand a year. That is a revenue loan. That's going to be a daily or weekly payment at a high interest rate, depending on the terms, from 19% up to 55%. It is ridiculously high. It could be very useful, though, for cash-rich, credit-poor businesses that need a shot in the arm with some working capital to get them to bridge them to the next thing. At Ladder, we love the opportunity to consult whenever we can. So for clients like that, we need to give them that type of loan. It's either that or close the doors type of time. Don't close your doors. Take that type of loan, but let us coach you on how to get to that prime. You know what I mean? Get out of that type of loan, because it's not meant to be hanging on to for a while. 1 or 2 of those in a lifetime of a business might not be bad. And it also depends on the type of industry and what's going on when you're talking about those types of loans. Okay. Same thing here. All right. Anytime you guys hear 0% financing, anybody in here, put in the chat, please. I might even send you a free Starbucks card if you get it right. If you guys hear the word 0% financing, what is the first thing that comes to mind when you hear that, when people are targeting you? Business credit card. Very good. Yes. Business credit cards. It is true, but it's kind of misleading if you leave it at that. Wouldn't you agree? Yes. Here's another thing that I will tell you. Yes, credit card stacking. Yes, it's a very, very good thing, but it's such a way of maximizing full credit potential that there have been quite a few companies and our competitors out there that are trying to get into that space or have been in that space. And I will tell you, we are the only company on the planet that is success fee based. Period. We're success fee. A lot of our competitors will ask for big money up front, say we're going to fund you for 12 months. We'll help you navigate the swamps of the blah, blah, blah. Do all of that kind of stuff. And that's just a promise. That's a bait and switch. I'm telling you right now. Because as soon as you do that, then now they're going to really look at your credit and go, oh, as soon as you get these 8 inquiries removed and pay off that collections and blah, 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 then we can get it after they've already taken thousands of dollars from you. At Ladder Financial Group, especially those that have been doing business with us, it's free. It's success fee, right? We're only successful if we're successful for the client. It's a free review. We give completely free reviews all the time. We still sometimes might get a complaint or two. That's how crazy this world is. It's completely free. No risk at all, no money up front, no ding to your credit, no hard pull whatsoever. We allow our team and our AI and our algorithms to search over 400 lenders in order to find the best opportunities out there. Because I'll give you an example. I run into business owners all the time, as you can imagine, right? They know that they need a certain amount of money. for something. Maybe there might be a couple of things or a multitude of things that they need that money for, but they've calculated they need, let's say, $100,000. Well, let's say that they're not qualified for $100,000. Let's say they're qualified, and the most we can get in one particular program might be 50,000, right? But there might be other programs that we can stack on top of it, not just like credit cards. We might be able to throw credit cards in. We might be able to do a personal term loan. We might be able to do a business loan. You know, and whatever things we have to do, an equipment loan combined with an unsecured loan, you know, because they're two separate entities. Now we can get more bang for your buck as a business owner to accomplish what they are. I call it chopping up that elephant and into bite-sized pieces, right? So I want you to keep in mind about that, right? Because there's a lot of stuff. You guys have got to get what we like to call get the bag now, because you don't know what you're going to be qualified later, right? Let's imagine a world where you have an 800 credit score, okay? And this I want you to know how sometimes insignificant that can be, right? When it comes to the big picture. Even 800 credit scores, right? Follow me here. Let's look at a 12-month time period, right? Let's say nothing's happened in a year. The business owner or personal, and this is for both sides of the fence, guys. I'm trying to help you out personally as well, right? 800 credit score. You haven't done anything for a year. Now you go for a loan, any kind of loan, business loan. I got my business credit rocking. My personal's rocking. Everything is good to go. I want to borrow some money, or I want to get access to more credit, right? So you go shopping. You get that stuff done. You get it going on, right? Once that happens, there's no matter what, you cannot have a trade line without an inquiry, unless you're borrowing from the Sopranos, because they don't report to the bureaus. Okay. Other than that, ultimately, if you're going to have a trade line, it's going to be an inquiry involved in it, right? So if you know that that's going to happen, and you do, let's get the bag now, or let's just do 1 to 2 trickle things, you're pretty much dead on arrival for about 9 months after that for max amount, right? Excuse me, not 90 days, 3 months, right? Because when you do that, and now what you have done is all now reported to all the bureaus, now the next lender or the current lender or whoever you need more money from or credit from is going to see that, and is going to want to see, I need more time to see how you or your business has handled that new debt, right? Before we commit to maximizing your full credit potential with us, right? So that'll happen. So even an 800 credit score is going to go like this throughout the year, right? You only got about 3 times a year to maximize the full credit potential of what good credit, prime credit can do for you, and even mid credit, right? So what I'm saying is if you're going out and you're looking for working capital right now in the startup mode, you better get the bag now, because you do not know what is going to happen in the next 90 days, right? And you don't know what's going to happen in the next year. So if you're going to say, "Oh, Craig, you got me approved for 150,000 in corporate credit cards. That's awesome. But I that makes me a little nervous. I only want 40. I did my budget. I think I can get by with 40." Okay, take the 40. 90 days go by, 60 days go by. "Craig, I need some more credit." Well, that 150 is not 150 anymore. Now I might be able to go get you another 20 or 30, right? But if you'd have taken it right when it was available, you take it. It doesn't mean you use it. That's another good thing about revolving. You only use it when you need it. So in my mind, it's a no-brainer, right? So especially the small to medium-sized businesses. Now, when I talk to my business owners that are making 6, 7, 8 figures, right? A corporate credit card to them is just like, something they'll use for petty cash or to give to employees to travel for them. Okay. They're on a different scale there. If you happen to have a company like that, there's obviously a different approach to building a credit facility for your company, right? Because everybody has to have a little bit of a credit facility. When you start to get to 6 to 7 figures a year, there are certain loans that, even though they're high risk, if they're a small part of your lending portfolio, then it's almost a dollar for dollar write-off on taxes. So sometimes it helps, believe it or not, sometimes it helps companies that are at a certain level to have higher interest loans to offset what they could pay on capital gains with taxes, right? That's a different level. For those of you, if you are on this webinar and you're in that situation, please book a one-on-one with me. I can talk with you all day about that. But what we're here to talk about today is these new trends with AI, like we've covered, what Ladder Financial brings and what makes us different from everybody else is out there. Right now you just get an Instagram account, just start talking, right? Well, we've been doing this for a long time, all right? So I'm going to kick it back over to Hiram. I think he's ready to start yakking. We'll get into a Q&A here soon. Hold on.
Woo! All right, guys. Hey, listen. Let's move into. We've already tapped into artificial intelligence. We also want to give you guys three gems at the end. So hold to the end because I have some gems here for some of you guys. I noticed that in the chat, some people were asking, hey, about refinancing my car, all that kind of stuff, transfer liabilities and whatnot. But one thing I do want to chat with you guys here is cash preservation. It's kind of something that he tapped into very briefly, right? Cash preservation is one of those things that you got to have cash. So I want to drop just three gems on three solid lenders that we like to use when it comes down to, I know you may already have, you're saying, hey, listen, I already have the credit cards. I already have lines of credit. I have all this kind of stuff, but I just need a little bit of cash infusion to my business. Some people, little means 25 grand. To some business owners, little means $250,000. So I want to give you at least three lenders that has been very favorable in being able to provide you little to up to 25 up to 250 grand. So get ready for this. So Fundbox is one that we like. Fundbox, Fundbox. Okay. The great thing about it is they'll tie your business bank account. You got to run this play through the business bank account, not the personal. It's got to be in the business, right? You got to make sure you have your entity, your LLC, S Corp, C Corp, or whatever. You want to make sure you have your virtual address, or you have a brick and mortar, you have your EIN, you have all that stuff in play, right? But Fundbox will be able to connect through Plaid, which is a software that connects to your business bank account, and it'll look at the trends, and then it'll give you a favorable amount. So if you have about, let's say, $5,000 running through your bank account, they're probably going to give you somewhere around $15,000 to $20,000. And then they're going to give you about 6 to 12 months to pay on that money. But it's connected to your merchant account, which is not something that you'll be making weekly or daily payments. There'll be a minimum monthly payment, but at least it gives you breathing space based on what you're selling. So when you keep on selling, they'll take a little 12% out of that money, and then you're able to pay it back. And it's no harm, no foul. Very easy company to work with. Second company, if you have a relationship within Amex or outside of Amex, you can use Kabbage. Okay, they're very quick on depositing money into your account. It's about $100,000 deposit into your account quickly. Very short application. They connect. If you're with American Express, they look at your risk factors, and they also look at your credit recommendations based on how much you use it, based on how many times you pay down under the utilization rate. The third bank that I also want to let you know on is that there is a charter bank. It's called Charter Bank. If you have Square, Stripe as your merchant account, or you have not PayPal, because that PayPal has their own finance company, but it's Stripe and Square. If you have those two merchant accounts, you can apply through them, and it's called Charter. They will look at your transactions and how many sales you're doing, and they will also loan you money based on that. Some people have seen get $150,000, and I've seen some people only get $8,000. But it's based on what you're utilizing the money for and how you're utilizing the funds and how you want to utilize the funds. Little side note: anytime you speak to a lender and they ask, what is the use of funds? You're not going to say marketing. Don't ever use the word marketing. Banks don't like to hear the word marketing. Why? Because there's a lot of marketers out there, right? No offense to anybody that's here in marketing. You guys are probably awesome in marketing. But there's been that whole thing when it comes down to banks and marketing that they may ask you for $50,000. We'll do the whole world. We'll make sure that you have all this and happening, and then they don't deliver and your business is still stagnant. So you always want to use the word working capital. It is what it is. You're using the money for working capital. Okay, so the three banks: Kabbage, Charter, and the third one is Fundbox. Okay, moving on. Why am I saying this? We're moving into a new era. It's called the digital space. It's the digital currency. I'm not talking about crypto. I'm not talking about Bitcoin. If you're into that, Forex, that great. That's cool. Congrats. What I'm talking about, look at what happened with the federal government not too long ago. They're starting to incorporate to replace the Zells of the world, the Cash Apps, the Venmos of the world, and now have everything channeled through FedNow. When the federal government gets involved in banking, it's not your money's tapped into, right? Your money's tapped into 24/7. Especially they're integrating artificial intelligence bots into your applications, your phones, your banking, and all that good stuff. And when the situation gets bad enough, and we go into a bear market and they cannot supply the funds or people pulling the money out. You heard what happened in California with SVB. What happens to your money? If you're in the digital currency space, where you're now utilizing more of your, your Zells, and now the government has control of that to be able to turn off a switch and say, hold tight, we can't have millions and millions of people pull their money out. That's where cash preservation comes into play, right? Because when you can now take out $100,000 loan, you're making and generating money, or even you can take out $25,000 and you put that into an operating account or a savings account for your business, but you have monthly payments that you can make through your business credit card. You're now building your bag and your savings so you can fall back on money when digital currency can't be used. Are you guys following me here? At least give me an amen or something like that in there. Listen, I'm giving you the truth, because this is what's happening right now in the banking space. Why is it that everybody has such a big push for digital money? You go to bodegas in the Bronx and you find Bitcoin ATM machines. You go here, you find other, selling Forex. You go here, other companies utilizing Bitcoin as a currency. What is such a big rush for digital currency? Because it's a controlling mechanism of your money. So what do I say? Cash preserve. Y'all remember our pops, moms, and aunties and uncles and grandma, they had the Nike shoebox, or under the bed, they had stacks of money, right? It's because they went through that. History always repeats itself. But now we're moving in a whole new direction that we just don't understand the algorithms of what artificial intelligence really is. It's really scary. We've been working on this for 2 years. And the fact that we can pull somebody's credit with just first, last name, telephone number, and email in the banking space, cash preservation, save that money, right? Your 529 for your kids, your savings and all that, right? Boom, you keep that. But your business also have to have 3 types of accounts: an operating account, a case by case, have to tap into this money account, and a savings account. You also have to be able to not put your eggs in one basket. You need to have a regional, a credit union, and a national bank. Your regional banks it's outside of where you live. Your regional stays within that realm and understands the area and the territory, and your credit union is who you use to compete against the other two to get you up. Revolving lines of credit, credit cards, all the things that you need in your business. Start moving that liability off of you and put it into the business. It's very important that we understand this process, okay? So, final thing I want to talk to you here is very briefly. It's something that we've been working on lately for a lot of clients. It's what you call park your money method. What this is, for those of you that are wanting to be able to get higher limits, like, hey, Hiram, I got a BOA. Hiram, I got for 25 grand, I got a Citi for 25 grand. I got a Chase for 25 grand. How do I get to this $300,000 space? How do I get to 200? How do I even break $100,000 with the limits that I have, or even just start somewhere? I'm gonna give you an idea for those that you already have credit cards, but your utilization is just a bit too heavy. This is something that we call in the industry parking your money. So step 1 is being able to get the funding that you need. Look at the utilization that you have on all your cards. Make sure that you're under 40% on all those cards. So if you're maxed at 100, that means that you owe 60% on each card. So you take that number and now you apply utilizing other third-party and alternative lenders. One is going to be BHG, right? I'm going to give you that one, right? BHG. For those of my military peeps, you can go with Pentagon, okay? Pentagon. No, Craig, no USA. Pentagon. And then the third one is going to be Digital Credit Union out of Massachusetts. You got to give them a $15 contribution, but they're a national credit union. All right, so y'all with me? Pentagon, BHG, and now you have Digital Credit Union, DCU, out of Mass. The reason why I'm saying this is because you now need to pay that utilization down. I would even say under 30%. Keep it down, 30%, all of them. You borrow the money that you need to bring them other 30%. And then at that point in time, once you have all that money, you pay down your cards, wait for 30 days. All you're going to do is make one payment on the money that you borrowed through any of the 3 resources, or maybe it's your own bank, or maybe we can help you out with that. And then at the same time, once you have that money's been paid down, wait 30 days while now your credit increases, your utilization decreases, and now we start applying for business credit cards. Or even calling that bank back and saying, hey, is there an opportunity for me to get an increase or be able to do this? I mean, we have a specialist that does this here all day, and he does it all day. Hey, listen, I just got this person, they only had a $12,000 card, now they have a $40,000 card, right? So it's all about getting higher limits. Once you get your higher limits, you should have enough money to be able to support your company, but at the same time, pay the originating lender. So how does that look after 30 days when you pay off that lender in one full bunch on the first initial one? It looks great because you just paid off a term loan, and now your utilization, you've removed yourself from liability into now all business accounts, where you had the TD banks, the Discover card, the cap ones that are kind of co-reporting accounts, right? Now you can start moving into other fields and areas that have bigger and better opportunities. You have the opportunity to get rewards. You have the opportunity to use for payroll. You have opportunities to go into bidding to government contracting and everything that you need to be able to produce and scale your business and catapult your business to the next level. This is one of my favorite quotes that I always talk about. Debt acceleration will catapult business funding to a whole new level. It will catapult your business to another level because it allows you to utilize other people's monies in times that are uncertain. Uncertainty is where we're heading in right now, right? We're all talking about bear market. We're all talking about this. October 4th, there's going to be this coming down. All kinds of conspiracies. It may be real. They may be right. The crazy thing is, though, remember, cash preservation, catapult your business when it comes down to debt acceleration, and know how to utilize this business funding, right? Back to what we were mentioning a little earlier, when it comes down to digital currency, right? Digital currency, what if you have a $100,000 credit card right now, but they now chop it down to only 20? Because the board member said, hey, you know what? We just can't. Cash preservation can step in and do what it has to do, but you got to build that back in the back end on the savings. Anything you want to add to that, Chris?
No, that was a lot. I think you, hopefully everybody digested that because it does work. I've seen it happen live. So it's there's a lot of good strategies that we'll share as we continue on these as well. But I think we're getting close to Q&A time. Hopefully we have, I know there were some people that may have come in a little bit late, may have missed the intro. This is recorded. We will be doing these on a regular basis to let you guys know. And we'll also, I think we're going to get some links out to you as well. If you'd like to schedule one-on-ones for our free lendability review that we can do for you and or your company. We want to make sure everybody has access to that. For those of you that are listening out there in LFG land, you guys can start posting that now. But I'd like to get to the Q&A. Yeah, hold on, let me unmute.
Yeah, so something that I wanted to do really quick. I wanted everybody that's here that stood to the end. I said I was going to give them a few little things here, right? So there was some people at the end that was, or maybe through the chat, I seen a couple of questions regarding, hey, you know, I want to get a vehicle under my company name. All right, so check this out. All right, screenshot it, guys. This is what I want to do for you. You need to build your corporate credit in order for you to be able to get these offers. Every vehicle that we purchase under the vehicles name, Craig will tell you, and a lot of people in the company, it's been through Ally. They're one of my favorites, right? You need to have a Dun & Bradstreet Experian and Equifax profile, entity in good standing with the Secretary of State, EIN number with IRS, business address, matching everywhere, DMB number, boom, license if applicable. If you're an attorney, you know, professional, business bank account. This is one of the easiest lenders to be able to get an approval with when it comes down to vehicles. When you get the Ally application, make sure that the Ally application you're getting is not the personal one. It is the one that has that doesn't even have your information. It doesn't even ask for social, date of birth. I promise you, you got to ask for the corporate resolution or corporate Ally application. They will give you the application. I promise you, there is not even information on your social, your date of birth. So that's one thing I want to give you. Let's start transferring that. Bank of America only gives you 80% loan to value. That means if you're looking at a $200,000 card, they're going to want to give only approve you on $160,000. So you got to come up with $40,000. Ally does not want to finance tax, title, and licensing. So be ready to come up with taxes, title, and licensing. It will sweeten up the deal. I know a lot of people talking about TILA, you know, down payments are illegal, blah, blah, blah. No. When it comes down to business, not the same thing. Let's look at Chevron. I know y'all have Chevron on there, right? The great thing is that if you can fuel your vehicle, company vehicle that you just get through Ally, with a fuel card, guess what? That's part of maintenance. That's a write-off for your business. All right, let's scroll down a little more. Chrysler Capital. Chrysler Capital, right? Reports of Dun & Bradstreet, Experian, and Equifax. And it's a revolving account, my friends, meaning you can get the car, plus they'll send you an additional card with some money on it. So if they approved you for a line of credit of 150, you bought that jailbreak, and now you have a remainder of $60,000. Maybe we can put that car on Toro because I already got 2 cars through Ally, 2 cars through Chrysler. I don't drive. I only drive one vehicle one at a time. Maybe I can put that on Toro. Hello, I'm giving you a little high five right here. I'm giving you gems right here so you can open up other entities, right? A real big house is built on stanchions, right? Solid stanchions. So the more stanchions you have, when you remove one, the house is still up. Okay. So I just wanted to give you guys that little gift. Chrysler, Chevron, Ally. I got more, but that'll be another a webinar that we'll throw some more gems on here. All right. Appreciate y'all. All right. Who do we got?
Any questions?
Yeah, I got a question if y'all can take my question. So I hear I'm also kind of getting into the funding space. I've been learning this stuff for like a little over a year now. I've been actually watched the same concept of this video from you guys, but it was like over a year old, and that was great. But I hear you talking about getting like reconsideration lines for when you're funding someone. So how can I, like, what do I need to say to the agent to call on their behalf? Or can I pose as the client? That seems a little sketchy though.
Which type of funding are you referring to?
Like if, let's say I got a client, a business credit card, but I knew the limit was a
Gotcha.
little
So
whack.
we're talking about stacking. First of all, you need to talk with your client, get the trust of your client, and then also get permission from your client. You need to get that. You got to get it signed off. Limited liability. You got to explain to your client, this is what I'm going to do on your behalf, that's exactly what we do here, right? We not only get the high approvals and can go there, plus we have a lot of places to go, whether, like Hiram was saying earlier, whether it's national, regional, or local. And then there's different things, obviously military affiliations. So we uncover every rock. But we set that up with the client to explain the full process on why we're doing what we're doing. And this is why they're paying for our services, right? We know not only do we just get the approval and go, hey, we got you the approval here, we got your approval here, we're never happy with it, right? I've got 2 or 3 of my in-house people that are in this webinar right now listening to what I'm saying, and they'll say the same thing, right? We immediately go after. If it's pending longer than it should, we're making a call. If we got whatever the amount of the approval is, we're calling asking why we can't get more. Right? Because that's doing a true service to your client and obviously helping yourself at the same time. Now, when you get into what we consider tier 2 in Ladder Financial, which is traditional business lending, if you're getting into the broker space, then there's no need for that because that's done on the application. And because of your contract and agreement with that bank or lender, it's already known that you're going to be fighting as an advocate for your client to get that approval and get the numbers that your clients want with that, because you already have a contract, let's say with an on deck, right? Or or you got a broker agreement and then you're trying to negotiate over at Kabbage, like we brought up Kabbage. There's some alternate. I got to be careful what banks I talk about. But yeah, so that's automatic when it comes to tier 2. And because your commissions and everything that you earn in that space as a broker is going to be built into the loan and paid to you from your ISO agreement. So you don't need a broker. You don't need to have asked for more money, right, from your client. But when you're providing a service to navigate, like we were talking earlier, through the trials and tribulations of getting the credit, knowing what banks to go to, which ones has the best perks, going after, that's a service you're providing your client. You're going to have to get them underneath the contract, so you can speak on their behalf and or tell them, hey, this is what they're going to say. This is what you should say, because you're an advocate for them, right? You're a fiduciary for them. You're working on behalf of your client, not the bank. So then that's when you would charge whatever fee. And that's what I was bringing that up earlier, right? We're success fee based. If we're not successful, it's free. right? So, and then you'll learn a lot as an end user and client. So did that answer your question?
Yeah, thank you. So I
Awesome.
can just like clear it up. So if I have them, because I have like someone I'm working with now and I have a funding contract, all that thing, but I don't have anything in there saying, hey, I can talk to the bank on your behalf. If I add that into the contract, the bank's not going to look at me funny when I call and say, hey, my client, do.
Well, you want to,
Yeah. So maybe that's a topic that's offline because you start kind of getting a little bit in the gray area when it comes down to that stuff. For best practice, I would prefer to have a client on the horn with you while you're going through that process, and then you're coaching them. That would be my take on that. And it's based on experience with other companies that do funding, all that kind of stuff. Things really start to happen when the debt starts to go sideways. Let's be real. Everybody's fingers start pointing. Oh, it wasn't me. I won that call, and all of a sudden they pull the call. He don't sound nowhere like you, and it's all of a sudden now you're in heat for that. So I would advise, let the customer be on you with you on the call, and then you can really. That's what you're charging. Your knowledge. Just because you can get a credit card within 60 seconds, and it takes them a month to do it, that's why they're paying you what they pay you. Yeah. Thank you.
That
I
was
appreciate
great.
it.
Can I ask a question?
Yes, please. Please, absolutely.
Hi. Hi,
Hi
everyone.
there.
So wanted to revisit the auto loans. So I have a client that has an auto loan with TD Auto Finance. They said that they would not PG it, but they did. So it's in the PG and the personal. It's 100 and something thousand. And wanted to just kind of figure out what's needed to just transfer it over to the business only, but wanting to know with the Ally, what are they looking for on the DUNS? Like, are they looking for it to have a certain PAYDEX score? What are they kind of looking for that?
Yeah. So it's very important to, well, it's not really going to work on the Ally side if it's used, because Ally is only working directly with the dealerships. So it's got to either be a trade-in to Ally, and then trade to the dealership for them to get a loan with Ally, or they got to go at that point in time go with either Truist, not for a auto loan, but for a term loan, working capital loan. Because if it's 100 and something, they will require only 3 months bank statements, and then 1 year in business, and then they will finance the whole thing. Okay, or if they have the money for down payment, you would do like a KBB, run the KBB on the car, Kelley Blue Book, and then Bank of America is going to pull left side. So let's say KBB has wholesale, auction, and then retail. They're going to go all the way to wholesale. What would a dealership want to wholesale it, and then give you that percentage? Which, if you look at the retail minus the 20%, it ends up being wholesale. So those would be the best two options that they can get the vehicle transferred into the business. But if they want to get Ally, or they want to get a captive lender, then they have to trade it in and then now get Ally to be able to do that deal for them on whatever other vehicle. Now, Ally is a captive lender, although they're a subpar to GMAC, Chrysler, Ford Motor Credit, Mercedes-Benz Financials, BMW Financial Services. Although you have these captive lenders, Ally is still a sub-captive that they would finance almost any vehicles except the newer electric stuff. But I mean, we finance cars in a company name for $160. We finance cars in the beginning for $80,000, right? So they don't care, because they run the business banking. So they know that there's activity. They don't have to ask for financials, and they know that the business is making money and there's no PG, but they got to fill out the corporate application, not the personal one that you see, your personal name, and then in the middle is a small box of your business, and then there's a cosign on the bottom. It's a different application. Hopefully that helped. You're welcome. Absolutely. What else we got? Talk to us. Talk to us. Talk to us. What we got? What we got going on? KS, what's going on?
Hi, Hiram.
How you doing?
Hi, Hiram.
Welcome. What's going on? How are you?
Thanks a lot. I think I met you at Ham's masterclass in Pennsylvania earlier on this summer.
Oh, good to see you. Good to hear from you again.
Yeah.
The voice sounds familiar.
Yeah. So my question is, if you're a small business owner, right, is it good to have the DUNS number? Because you were saying that it's the banks usually get a lot of information if you have a DUNS number, and then it somehow affects you based on the level of information that they have on your business. So I want to know if it's good as a small business owner to get a DUNS number.
Every business should get a DUNS number. Listen, guys, right here, anybody that has a business entity and they have an EIN, every business should have a DUNS number. Why? Because when you start building credit. Oh, by the way, Lady Finance, you got to have a minimum of 55 Dun & Bradstreet. By the way, so you don't need the 80 for your people for the vehicle.
Thank you.
But everybody should have a PAYDEX. They call it a PAYDEX number. You can Google right now how to get a Dun & Bradstreet number, and it'll be put your business information in. Don't put your business information. Don't put if you work out of your home and it's a home address. Do not put your home address on Dun & Bradstreet. The worst thing, especially ladies, you got some people out there on Instagram, they're kind of cuckoo, and then all of a sudden your business address is your household, and you should have somebody showing up at your house. You don't want that, okay? So you want to make sure that you at least have a Regis, a Opal, a Da Vinci, an iPostal, or a virtual address somewhere. And then once you have your entity, your EIN, your business bank account, you have a virtual address, okay, and you have a business phone line. You can get that AT&T, Verizon, right? We didn't even talk about that, but I'll shoot that afterwards. But as long as you have that, you can now apply for a Dun & Bradstreet address, because it's hard to change the information by calling them, and they always want to sell you something. You know, it starts at 1,200, and then they chisel it down, then they chisel it down. So yes, get a Dun & Bradstreet number, because when you start applying for credit under the business, that is one of the things, the first ones that they're going to pull is a DNB. All right. Hopefully that
So
helps.
a follow-up. Thank you very much for the question, but a follow-up. If the business is new, let's say a few months old, it wouldn't have any credit. So if the banks are pulling any information, what would they get? Because let's say if you've not set up you just set up Dun & Bradstreet number, and you don't have any experience business credit, then how would that affect you getting business funding? That's on the credit side.
It's called your GOES. That's where a lot of lenders are going to ask you to personally guarantee it. The business credit on the business profile is what they call a GOES. There's no credit established. That's why it's important to build that up, so that with time you can stop you can get yourself, okay, let me go to BJ's and get the BJ's business account that's funded by Synchrony. Boom, I just got approved for $5,000, but you got to have let's be honest, the T-shirt frogs, you got to do this, you got to get Quill, the Granger, the U-lines, and keep that consistent and build that up. But unless you don't build that up, the banks are still going to continue asking you to personally guarantee it, because your business has none to support it, right? So even with a brand new business, yes, personally guarantee it. We personally guaranteed in the beginning, but as we continue to make money, we didn't have to do it anymore, because the bank started seeing bank history, bank flows, bank income, financials that was automatically reported to the IRS when we did our filings. So when we went to apply for assets, the banks were like, okay, we're good, because based on the tax returns that we pulled with the data gathering companies like MX or Plaid or Dun & Bradstreet or IntelliScore, it shows that this company made this much. So there's flow and action going on. But to answer your question, yes, they're going to look at your company as you have nothing really going on, and you got to build that in order for you to be able to get any type of lending response.
All right, thank you very much. That answers my questions.
Yes, sir. Indeed. Thank you. Anyways, I wanted to chat really quick. It put a 1 if you guys have your cell phone in your name. If your cell phone's in your name, put a 1 in the chat. Who else? Okay. Find out when is your next billing cycle. When it starts and when it ends. You're gonna go drive down to AT&T, Verizon, or T-Mobile is kind of the hardest, but AT&T, Verizon, AT&T and Verizon are going at it right now. They're going at it right now. They're wanting business, especially with the new iPhone coming out. There's a big campaign going out right now. T-Mobile, you can get it with T-Mobile, but T-Mobile is just a little bit restrictive, right? Because the way that they base their plan and how they build their phones. But you're gonna ask for a transfer of liability. You're not going to speak to a tier 1 representative there. They don't know what that is. You're gonna talk to a business person. These are people that go to the government agencies, local jurisdictions, big companies and all that. They supply phones to your cable companies and all that, right? You're gonna ask for the business person that manages the business. You're gonna do what they call a transfer of liability. Thank you, Craig. They'll even give you Wi-Fi's, especially like in zones where, like, you know, Alabama and you know, hurricanes and all kinds of destruction. They'll give you these Wi-Fi's. Hey, free Wi-Fi's. Here you go. Hey, you got an event going on with somebody? Hey, take 10 of these and just show off. Okay? You would do a transfer of liability and transfer that phone from you personally into the business. Now, I'm gonna let you know on this. You're not gonna get the ESPN, the Frizzles, the Sizzles, and all that good stuff that, you know, Disney for the kids. No, your your phone line is going to drop in price, but it's because it's like not as bare bones. You get great service. They give you a bunch of gigs. They give you anything that you need. They will treat you like a king and queen. But go do a transfer liability and go put that phone under the business name. Stop paying for that phone to you personally. Now what's gonna happen is, like, depending on the company size, we were able to get $75,000 BTA. What does that mean? Built to account. So that means if I'm hiring people, I can get laptops with cards in them for internet. I can get, there you go, Verizon Biz, exactly. You can get as many phones as you need, right? They'll approve you up to 100 lines. They'll give you Wi-Fi's and all kinds of things that you can use around your house. They may even offer you a bundle service that throws in the free CDs and all that. Listen, guys, transfer that liability over to an asset. And I want to drop that gem here for you guys. It's very important to reduce the cost of your company and have it all scaled out for your accounting at the end of the year. This is how much I spend on phone services, technology, so on and so forth. Hopefully that helped. All right. Any other things?
Will we be able to access this live after? Like, is it recorded?
Only for $19.99. If you do in the next 10 minutes, we'll throw in a knife set. Absolutely. We'll definitely send it your way. We'll get to everybody.
I have a catering business, so if it's a good knife set, we're good.
I gotta chat with you. That's awesome. Yeah, absolutely. We'll get everybody's email here, and we'll send out a replay for some of you. I know. Listen, it's 3 o'clock. You know, at 4 o'clock, we're moving, we're shaking, we're picking up kids, we're dropping off kids. We're still working, we're still grinding. So we'll make sure that we get it all nicely put together and send you guys an email. I appreciate that. Thank you for the question.
Thank you.
You're welcome. You're welcome. Anyone else? So Jarrell, is that possible? I can read your question, or you want to maybe unmute?
Sure, you can go ahead.
Okay.
Yeah, go ahead. Mm-hmm.
Yeah. So your question is, I have not launched my location consultation business, but I've signed whole classes and at the property. I understand safety, but this is until I get to separate my brick and mortar. I'm not there yet, just starting. That's okay. Just make sure that you can have some sort of policy, which is not going to cost you a lot, but some sort of policy that can kind of secure the people that are going in and out of your house. In case that anything was to happen. You know how people are. Everything is good and dandy until something happens. So I would definitely advise, like, maybe a Liberty Mutual or a property management company that would offer you an additional addendum that would be, okay, from this time to this time, I consult, I do this, and they maybe have a side door. They might have somebody come out and inspect, but it might only run you maybe about $20 or $25 a month. It at least secures you with a policy for about 100 grand or so, if I'm mistaken.
Okay, and what company did you say again?
Liberty Mutual offers something like that, and every state is different. You know, they underwrite depending on the risk factors in what states. But Liberty Mutual is pretty good. And then there's another company called Bristol West, Bristol West. It's a subsidiary for we are farmers. I had to sing the jiggle. Bristol West, and then there's many out there. But you know, you want to make sure that you get the best pricing, but it probably is like 20 to 25. It might even be cheaper depending on the if you're in the inner city or if you're in suburbs or wherever you're at. But at least that gets you secured and gives you peace of mind. If somebody trips or whatever, at least you have some sort of policy that you can respond. Your company can respond. And I know you're an LLC, right? So you're a limited liability company. However, there's still the home piece that is a bit of a risk.
Okay. Even though I do have property insurance, you know, that was a requirement. You're saying I should get a little something extra because I'm going to be doing some business out there.
Yeah, I would kind of separate it a little bit because your property insurance may not cover your business.
Gotcha.
Your property insurance is only underwritten for, you know, disaster or devastation or something to include your family, but not to operate out of your household. So there might be some sort of disclaimer somewhere under that states that, and they may not protect that person that's walking in and out of your house. So yeah, I would definitely look into that, and also call your insurance company for your home, and also make sure that you can connect with the an additional underwriter that can give you more advice towards that. But I think that would be the best way and the best play.
Okay, and a second question, will I be able to, like you said, once I get started, and I'm just waiting for my NPI number so that I can start seeing clients and billing their insurance company. That way, you know, I'm getting paid and all like that.
Yes.
But as far as using the property, as far as like maybe you holding classes and consult, will I be able to use part of that rent as a write-off for once I get the business and everything in order?
Yes. All right. So you do have a mortgage. Is that correct, or your property's owned that, right?
I'm sorry. Say again.
You either have. Do you have a mortgage, or is your home owned out? Right.
No, I'm going to be renting. I'm going to be renting this. So this is going to be my home, but I have enough space that I want to like hold classes and you know, have lactation consults if possible, but use some of that portion of the you know, the rent as, you know, towards the business. Like you said, I would have to get insurance for that piece of it to cover. But also, you know, like I'm going to get a business, I'm going to have to get a business number, like you said, and all of that. I have a lot of work to do, so I haven't started yet.
Right. So the only thing when according to the IRS, now please don't hold me to this, and I always advise to meet with a qualified CPA or elected agent. But I always advise, according to the IRS, they're stating that you have to have a mortgage payment or own the property in order for you to have any square footage deduction. Now, the square footage deduction is going to be, I believe it's about 20, as long as it's no more than 25% of your property, that's what can be written. So the mortgage will have to be chopped down into 4, and then that fourth is what can be deducted throughout the year. So, you know, as a renter, you would have to find out if there's some sort of maybe contract that you have with the owner or something that you're transitioning into a full ownership. That is something that I would always bring that up to a CPA so that they can give you a little better advice. But the last time that I looked into that, you have to have 25% of that property has to be an office, and then you can write up to that amount because they allow you to write off the interest. They allow you to write off certain things and the expenses that run through the home. And that is a favor upon LLCs and other entities in the United States.
Okay, thank you.
You're welcome. Thank you.
Question,
All right.
Hello.
Hello, how are you?
I'm good. How you doing, man?
Good, good, thank you.
Thank you. I just tried to use the job form, the reserve with you guys, but it's not working. And I just sent you a message and Craig direct messages with my email attached. So can I what do I do?
Okay.
Did you see my reply? Sorry.
Let me see.
I replied back into the chat.
Let me see if this one
another
works.
reply. And then you got my email address there as well. I sent it to you direct message.
Let me see. No, I didn't get your reply, Craig. I'm trying to use a form now, but it's not allowing me to send. I can put information in, but it won't allow to send. So
I got you. Hold on, I can't hear you.
Yeah, all right. Let me, we have your email here. Is it the, I see the dot.
It's karamu@gmail.com.
Okay, let me send that
I
over
think
to my
Craig
team
already has
and
it,
have
though.
them. Okay, please send. I'll send it over to another team member here. They can send it. They'll send it through an email.
Very well. Thank you, sir.
Yes, sir, indeed. Thank you. All right. We're about that. It's about that time. What's going on, guys? Any more questions? If not, we'll connect with you guys at a future event. But if I can ask you guys for a favor, obviously you came to our webinar and we appreciate that. One thing you guys notice, we're not here trying to sell you any packages, right? All we're asking is just if we can give you gems, and you guys found out that we were able to do that for you guys. If you can jump on Google and Google us, Ladder Financial Group, and give us a good review, we would greatly appreciate that. Again, we're not looking to sell you guys anything. We're just looking to give you value. I think that a lot of times there's so much businesses that are out there. They're saying, hey, I do this for you. I do this for you. But wait, you get a 3-day challenge and they're trying to charge you 25 grand. That's not what we're about. So if you found value, we want to make sure that we continue giving you value and all that you need. Craig, you want to say something?
I just want to be clear. We will fund that though. We will fund high ticket items, mentor sales. Don't get me wrong now, but yeah, this was not designed for that. And Hiram's right. We wanted to be able to give you information, give you some access to us. We're changing just like the financial environment does. We're in it every day. We do. If you register for this webinar, thank you. We have your email. You will be getting follow-ups from us. You'll be getting all the right links that you want. Check out our website. Hit us up on Instagram. Can't believe I said that at my age. Hit us up on Instagram. But yeah, we really appreciated you our participation in here. This will grow, and we want to make ourselves available to you guys. Hit me up on it's Craig at ladderfinancialgroup.com. I have myself or my teammates can answer questions for you. If you're looking for financing, obviously we'd like to advise you in that as well. If you're looking to partner with us in a bunch of different ways, some of our affiliate partners are currently in this webinar. Thank you for being part of our team. But if anybody's looking to use our services to help you grow and add another revenue stream to your current business, don't hesitate giving us a call, and it's all free, guys. It's just free information. Information is power.
Please, I have a question.
Sure.
Okay, my question is, what's the difference between the business credit cards and corporate credit cards? What's the difference between that?
You want to handle it? It's a play on words. You want to handle that? Yeah.
Okay, so when it comes down to a business credit building, kind of like what I was showing you a little bit with the cars, putting everything and building the business credit profile. Just like you build your personal credit, you're building the business credit profile on your business EIN, through your business EIN with all the 3 major lenders. When it comes down to corporate credit, it's the part that you actually personally guarantee, because there was somebody earlier that said, hey, what if I don't have anything on my credit or anything like that? That's where you use your credit to personally guarantee your business, right, to get corporate credit cards, like revolving lines of credit under your business EIN, right, which report only to the business EIN. A lot of times they don't co-report. Sometimes they may, but allowing your business to have that corporate credit so that through time, as you continue to pay up, pay down, pay up, pay down, you'll continue to build more credit under the business EIN with different trade lines that report. The other way is the more natural way. Some people may say, hey, Hiram, I'm not ready there. Right now, I'm sitting on maybe sub 600, 610. I just can't get credit. I had a little difficulty with my health, with my business, with my finances. Then we have something that we help you build out your business credit with you through our business coaches. And then at the time, by the time you're done in 6-9 months, you should be able to have 40, 50, 60, $80,000 built under your business EIN, not tied to you personally. So that's the difference. I hope that answered your question.
Oh, okay. And do you guys help with real estate investors for funding?
Absolutely.
Okay, I'll be in touch.
Yes, thank you.
Thank you.
Look forward to that. All right. All right. All right. So again, if you guys don't mind, give us a little shout out on Google. If you guys can go on there and give us a good review, we greatly appreciate it. As always, we'll be doing this again. Okay, so I'll take one more question here from you.
I'm sorry about that, but one last question. Do you guys
Please.
still have the program where you help clients become their own banks?
Yes, we have. That class is going to be launching next month, October.
Okay, all right.
If you send me your information, I can send you an email when we're ready to launch that class. That class, I think right now we have about 10 people registered already.
All right, thank you very much. I'll send you an email, or I'll film.
Yeah,
get in touch.
Yeah, absolutely. We'll definitely.
Please, how do we send you? I'm sorry to cut in.
Yeah.
Please, how do we send you our information? Because I was also having the same problem with the JOTS form earlier yesterday.
Okay, let me do this. Everybody that attended here, we'll just send it to you. If you see that you got a job form, just and if you want to fill it out, right? Fill it out. If you don't, we just want to make sure that we cover everybody. So everybody that attended today, what we'll do is we'll send a quick text blast or email blast and send it your way. That way you can have the proper job form. We can get that going.
Okay, I just put in my email address in the chat too.
Okay. You just put it in there right now?
No, like as the class was going on, it's gmnmason@gmail.com.
Got it. Okay. Oh, I see right here. Yeah.
Okay.
Got it. All right. Good deal. All right. Good deal. Thank you so much for the opportunity. We look forward to blessing you guys here sometime in the future. And again, once again, thank you for hanging out with us. I know you could be doing something else, but we truly appreciate everybody. Thank you again. And we'll look forward to seeing you soon. Any questions, we'll be reaching out to you guys and maybe individually, maybe just have a one-on-one. But we appreciate you all. Have a blessed week, and we'll see you on the funding side. Take care.
Thank you
so much.
Our pleasure. Thank you. Take care.
Over deliver.
Keep doing the classes. We'll be coming. It's
absolutely. Thank you. All right.